Okay, please confirm if my screen is visible, if I am seen, and if I am audible. Okay, we'll just start in 1 minute. Okay. Okay, hi everyone. I'm Afshana Afrin. I am an ACCA affiliate and I'm a member. I am a mentor at Being ACCA. I take test series for FR and SPR. So, welcome to the second day of our FR Master to March webinar. And I hope that by now, everyone who has joined me, you have attended the first day, and if you have not watched the first day webinar, there's no issue. You can find the recording. It's available on YouTube. Right. So I highly recommend that you watch the first day webinar and then you watch the second day webinar. Right. So again, let's start with a short introduction about myself. I am Afshana Afrin. I'm an ACC affiliate. I have been a rank holder for SPR. I got All India Rank 2 and World Rank 6. I did my Bachelor of Commerce from Jamia Millia Islamia University in New Delhi. And right now I'm doing MBA in Finance and Operations. I became an ACC affiliate in the October 2025 session, and I have done internship at EY India and Simulani Solution, where I worked in core finance and public policy. Okay, so let's not waste any time and let's directly move on to the webinar. So in the first day, we had a quick revision of few accounting standards, right? We revised inventory, we revised property, plant, equipment, intangible assets, and we also revised impairment, right? And then we solved some questions, approx, I think 7, 8 questions of section A, which are the latest questions which are released by ACCA. Right. So we solved questions from September, December 2025 and March, June 2025. And along with that, I also highlighted the reasons why students do not pass FR. And I have shared a link of a YouTube video where you can watch and where you can understand what the examiner is saying, which is the area where the FR students are making mistakes, right? The common mistakes made by us, which leads to a failure, right? So I just want to say that as long as you practice FR, as long as we have a few days left, right? So if you still have not completed your practice, you still have enough time to practice. Uh, Focus on Study Hub, focus on section C questions, and then you will easily be able to pass FR, right? And so in today's session, we will have a revision of IFRS 15, which is revenue, IFRS 16, which is leases, and IFRS S1, right? So other than that, we will have section B practice of the latest two past papers. And then I will also highlight some of the examiner comments, right? So, right. So are you guys ready for the revision of the standards? Please give me confirmation I'm clearly audible.
Yes, ma'am.
Okay. So without any further ado, let's start with IFRS 15. This is a very, very important accounting standard. If it's FR, you will have the standard in your paper. You will have the standard in your SBR paper also, right? So IFRS 15, it's important. You have a clear concept, you have clear idea about the standard, right? So a quick revision. First, you have to identify the contract with the customer, right? Second is you have to identify the separate performance obligations within the contract. Third step is to determine the transaction price, right? Fourth step is to allocate the transaction price to the performance obligations in the contract. And fifth step is to recognize revenue either at a point or over a period of time, right? So these are the basic 5 steps of recognizing revenue. First, you have to find out if you have a contract with a customer or not, right? And then you have to identify what are the separate performance obligations. Like, for example, if I'm trying to sell a mobile, am I selling just a mobile or am I selling the after the what do we call that? Apple Care Plus? Am I selling the service also or am I selling just the product, right? So you're supposed to identify the separate performance obligations. Then you have to allocate, then you have to determine the transaction price. For how much am I selling the phone? For how much am I selling the service of the warranty or the Apple Care Plus? For how much am I selling that? Right. And then you have to allocate the transaction price to the performance obligations. And then you are supposed to recognize revenue. Right. Now, over here, a common question is how to allocate the transaction price to performance obligations and how you recognize revenue, right? Whether you have to recognize revenue at a point or over time. And we have certain conditions for recognizing revenue, right? So we will revise that also. Guys, let's revise the conditions first. So what are the conditions when you want to recognize revenue at a point in time? See, simply you recognize revenue when control is passed, right? If I have a phone, I'm going to sell it to someone, right? So if I give the phone to someone else and I'm getting some consideration instead of the phone, then you can recognize revenue. Why? Because I no longer have the phone. I have given the phone to someone else, right? So when control is passed, when I'm satisfying the performance obligation, that is when you can recognize revenue at a point in time, right? So revenue is recognized when all the 5 conditions are met, which is that you have a right to receive payment, right? You have transferred the legal ownership of the product to the customer. You have physically transferred the product to the customer. You have transferred the risk and rewards of the product, and ownership is transferred, and the customer has accepted the product, right? So, this is when you can recognize revenue at a point in time. Okay. Then you have the second scenario where you could be giving a product, but then you're also giving a service with the product, right? So in that scenario, when you're giving service, that service can be for a long period of time. So IFRS 15 says that there are certain conditions you can utilize to find out if revenue should be recognized over time or at a point in time, right? So, what are the conditions? Revenue is recognized over time if any one condition is met, right? First condition is simultaneous benefit. If the customer is receiving and is consuming benefit from the asset which the entity is providing, then you are supposed to recognize revenue over a period of time, right? Like, for example, cleaning services and maintenance. Okay. Then we have condition number two, which is when the customer controls the asset as it is created, right? So if I am going to create, or if I am building a customized item for my customer, right? So in that scenario, that is something which is dependent on the customer, right? The company, which is me, I have no say in what design should I use. The customer is the one who is saying what type of asset he wants, what type of item he wants. So customer is controlling the asset, right? The entity has no role in controlling the asset. Instead, the customer is the one who's controlling the asset, right? Like, for example, building on customer's land. Right, when you do building, when there's construction happening, it will happen as per the requirements, as per the instructions provided by customer, right? The builder has no say that I want to make like this, I want to make these many rooms. No, right? It's the customer who is going to decide how many rooms he wants, right? So that is when the customer controls the asset. Then we have the next condition, which is no alternative use, plus you have a right to payment, right? So if again, if I am making, if me, I as a company, I am going to make a customized bag for my customer, right? So this bag should have no other alternative use. This item which I have made should be given to that customer only, and I should be receiving some payment for it, right? I should have the right to receive payment for the asset which I have created for the customer, and there is no alternative use of that asset, right? So this if any one condition is met, then you can recognize revenue over a period of time. And you have to recognize revenue at a point in time if simply you have transferred the legal ownership, you have transferred the risk and rewards of the asset to the customer, right? I'll share these slides with you guys. It will be easier for you to revise the standards. Next, we have some specific scenarios. These are also commonly asked in your paper. So first is agency sales, right? So in case of agency, like, what happens is that suppose I am selling a product, right? But the product is not mine. I have got it from someone else, and I'm selling someone else product on from my side, right? So, and if I make that sale, I will receive 2% commission, right? So now, as per IFRS 15, I can recognize the commission of 2% in my financial statements, and I cannot recognize the entire sales amount in my financial statements, right? Because IFRS 15 says that the agent who is making commission should recognize only the commission in revenue and not the entire revenue from the sale of goods. Okay. Next, we have sale or return. If control over goods does not pass on to the buyer, right? In that scenario, you don't record any revenue. Okay. Like, for example, if I am going to, if I have purchased a small amount, like I have purchased, um, like, a simple example will be that if I have purchased like, if I have purchased a lipstick, right? Now, in this lipstick, I have this the company has given me a choice that I can return this product within 2 days, and after 2 days, I cannot return the product, right? So in this scenario, a company will recognize revenue Only after the 2 days, which is the refundable, or which is the time period in which the customer can return the goods, in those 2 days, the company cannot recognize revenue. The company can recognize revenue only after the returning period has ended, right? If the control over goods does not pass on to the buyer, then do not record any revenue. Okay. Then we have the sale and repurchase agreement. Again, what happens is that you might sell something to a customer and then you might repurchase it from the customer. So, in this scenario, if the control does not pass on to the buyer, then do not record revenue, right? If the control is not passed, then obviously there's no revenue. Right. So whatever proceeds you get from this sale and repurchase transaction, you have to consider it as a loan, a financial liability. Right. So your journal entry will be debit cash and credit loan. Right. And you have to charge interest on that one. So your finance expense will increase. Right. So this was all about IFRS 15. Do you guys have any doubt in this accounting standard? This is a very, very important accounting standard. Next, we have IFRS 16 leases. This is also very, very important. This will also come up in your paper because obviously since this is important accounting standard, you won't have, it's not possible that you don't have this accounting standard, right, in your paper. So IFRS 16, you should know the definition of lease. What is a lease contract, right? So a lease is a contract or a part of a contract that conveys the right to use an asset, right? That conveys the right to use an asset, the underlying asset, for a period of time in exchange of some consideration, right? So this is the definition which you guys should know. What is a lease contract? What does it say? It says that it is giving you right to use an asset for a period of time and in exchange of some consideration, right? So there are three important things over here. And how do we measure lease? So at the initial measurement, you have to recognize a right of use asset and you have to recognize a lease liability. Right. So a right of use asset will include the lease liability, which is the present value of lease liability, any lease payment made before the lease has started, and any restoration cost and any initial direct cost. Right. And how do you value the liability? Liability is simply nothing but just the present value of the lease payment, which will be made in future. Right. So you discount it, you bring the lease payment to the present value, and then you have to add any fixed payment, any variable payment, if there is any termination penalty, if any purchase option is there at the end of the lease term, then all those items is to be added to the lease liability, right? So at initial we recognize the right of use asset and we recognize the lease liability. And then in the initial after the initial measurement, which is the subsequent measurement, in the right of use assets, depreciation will happen as it does, like normal depreciation will happen. And you check for impairment. If there is any impairment indicator, then impairment will happen. That's normal, right? For an asset. Then in liability, you have to follow the amortized cost method, right? The effective interest rate method. And as per that, you're supposed to record the lease liability. Right. And a lease liability will be split into non-current liability and current liability. Right. So the examiner does ask you what is the non-current liability? What is the current liability? Right. After the initial measurement. So it's important that you know how to calculate the lease liability at subsequent measurement. Right. Next, we have the short life and the low value assets. As I explained yesterday, that if there is any asset which is of low value, like for example, it's less than $500, right? If it's less than $5,000, and if the lease term is less than 12 months, right? Like, for example, I am going to get a furniture, right? If I'm getting a furniture and that furniture is for less than 12 months, then I have the option to follow a short-term accounting method, which is basically I'll expense out the entire expense for the lease, right? So you have an option to simplify accounting by simply recognizing the lease payment as expense in the SOPL, right? So this is a simple accounting which they have made an exemption sort of thing for the short life and the low value assets. Okay, is this clear? And after this, we have another very important topic, which is sale and leaseback agreement, right? So sale and leaseback is basically, for example, me as a company, I have sold my factory, right? But then the person to which I sold my factory, I'm saying him that give me this factory back on lease, right? So this is a sale and leaseback agreement, and over here, you have to figure out if it is a sale or not, right? So if it is not a sale, as per IFRS 15, right? What does it mean if it's not a sale? If it's not a sale, it means that control has not been passed on, right? You don't have the access to the risk and rewards of the asset, right? So in that scenario, you have to recognize any proceeds has a loan, right, has financial liability. So if the transfer is not a sale as per IFRS 15, then you have to continue recognizing the asset, and any proceeds from the sale and leaseback will go as financial liability, right? Next is that if the transfer is a sale as per IFRS 15, right? So in this scenario, you have to credit the asset, right? You have to dispose of the asset. You will recognize a right of use asset. You will recognize a lease liability, and then you will find any gain or loss on disposal, right? So this is a very kind of like lengthy journal entry, but then the examiner loves this topic and they frequently ask the calculation over here, right? They might ask you to calculate the gain on disposal in such scenario. So simply, if it's not a sale, then you consider it as a loan. And if it is a sale, then you have to consider that you have disposed of the asset, right? Then coming on to another standard, this is frequently tested more in the professional papers actually. But then there have been scenarios when this has come in FR paper also, right? So IFRS S1 is comparatively a newer accounting standard, which is for sustainability related matters, right? You guys must be aware of sustainability, about how important it is that we care about the future generations. Right. So, as per this standard, the standard is asking companies to take sustainability seriously. Right. They're saying that each and every company, like it's not mandatory yet, but then they are asking the companies to disclose any sustainability related risk and opportunities. Right. So it's saying that suppose if a company is taking certain measures to in favor of sustainability, then the accounting standard is asking the company to disclose those, that these are the expenses I have incurred because of sustainability matters, right? This is the risk that is happening to the company because of sustainability, right? So the accounting standard is asking the companies to disclose sustainability related risk and opportunities which are useful for resource based decisions, right? Because nowadays investors have become very sustainable, sort of, at least, right? They will prefer to invest in a company which is sustainable, which will be there in future, right? Which has a better, greater image in front of public. So investors are looking to invest in those companies which are more sustainable. Okay. So next point is that link entities' ability to generate cash flows to sustainable practices affecting stakeholders. Right. So simply, even if you just remember what is the purpose of IFRS S1, you get a entire idea of the standard. And the standard simply wants the companies to disclose the risk and opportunities related to sustainability, which will be useful for making decisions. Right. Okay, then IFRS S1 requires disclosure of information about sustainability related risk and opportunities, which can affect the entity's cash flows, which can affect the finance or the cost of capital. Okay, then IFRS S1 says that there are four major areas which should be disclosed in the financial report or the annual report, right? So these four areas is governance, strategy, risk management, and metrics, right? So these four are the important areas which the accounting standard is asking for disclosure in the financial reports. Okay. So if this is all clear for you, we can move on to the question practices. We will practice section B questions. And yes, so we will practice section B questions, and I'll just quickly send a screenshot of this on the WhatsApp group so everyone can have this. Right. You can go through the case, you can read the case and understand, and you can note down the important points. Because since this is section B, you guys must be aware of section B by now, right? In section B, you will get one case study. It might be small, it can be lengthy, it depends. And then based on the case study, you will have 5 questions, right? So please go through this case study. I'll share this on the WhatsApp also. You should note down the important dates. What is the year end? What is the any important dates which is given to you? What is the company name? If there is any other company involved, right? All these items you should note down when you read a question. Okay, like yesterday, I want everyone to please be active and try to solve these questions with me. I'll give 1 minute, and in 1 minute, you can go through the requirement, you can go through the case study again, and then you should, if you know the answer, then you can comment in the chat box, right? I'll give you guys 1 minute. Okay, I want everyone to solve the first question. This is for IFRS 16. Please solve the first question and let me know the answer. Okay, it seems like everyone has the correct answer. So let's just solve this one. So over here, yes, the answer is B and C because, okay, let's evaluate each and every option over here. So it says that which two of the of the following are characteristics of a contract which is a lease, right? So again, they're asking us what comes in the definition of a lease contract, right? What is the characteristics of a lease contract? So the first option is a period of time must be described only in terms, weeks, or years. This is wrong because a period of time can be in terms of usage, right? In terms of usage. Like, for example, I am going to lease a car, right? So if I lease a car, the lessor, he might be like, you can use this car only up to a certain mileage, right? So the period of time over here is mileage and not the days or weeks or years, right? So the first option is wrong. The second option is that it conveys the right to control the use of an identified asset. This is correct. You have the right over the asset. And then the next option is it identifies the period of time over which the asset may be used. Yes, this is there in the definition itself that the lease contract will specify the period of time, right? Whether it is for 5 years, whether it is for certain mileage, or whether it's for certain number of usages, right? So it can be any type of time, but then the time is specified in the contract lease, right? And next is option D, which says that it says that a lease contract automatically transfers ownership of the underlying asset to the user. This is not true. There is an option, like it depends on the lessor and the lessee relationship actually, whether the lessee wants to continue with the lease term, or it depends on the agreement actually. There is no such requirement that the ownership will be transferred to the lessee, right? So answer over here is option number B and C. Okay, this was quite a simple one. Next, we have question number 2. Please solve the second question. And for this, please refer to the WhatsApp group. I have sent you the case image. The interest expense to be recognized in March 20x6. Right. This is not in the first year. This is in the second year. So please be careful in that. Pay extra attention to the requirement. The dates, the years are very, very important. Please read the question. It says to the nearest thousands, right? Okay, so now we will solve this. We have got answers. The answers are correct, but then very, very common mistake that the question is asking in nearest thousands, right? So you were supposed to round off over here. Let's solve this and check now. It says the present value of lease payment, it is 446,500, right? And from this deposit has been paid, which is 40,000, right? So now our lease liability is how much? It's this figure minus this much. So this is our opening lease liability, right? So they have entered this contract on 1st April 20x4. Okay, entered into a into a contract. So on 31st March 20x5, it is when we will start the accounting, right? So opening lease liability, we have the interest rate, which is 11 percentage. So effective interest is at 11 percentage. We have the annual payments, annual installments, which is of 100,000. Then we have the closing balance, right? So on 31st March, the opening lease liability will be 406,500, right? And then we have the effective interest on this of 11 percentage, right? And then you have the annual payment, which is 110,000, right? So the closing balance is 341,215, right? This is the closing balance on 31st March 20x5. Now, if you don't pay attention to the requirement, then you are going to write this as your answer. You will write 44715 as your answer, but then this is wrong, right? The examiner is not asking what is the effective interest on 20x5, but then they're asking the effective interest on 20x6, right? So you have the opening balance, then you have the interest of 11 percentage, right? And then you have the annual installment, which will be the same as last year. And then you have the closing balance, right? So what is the effective interest over here? It's 37533.65, right? So it comes out to be 37534. Now you have to bring it to nearest thousands, right? So that it will simply be 38000. You guys agree with this? 38,000, right? And in the question, they have given you thousands already. So your answer will be simply 38. They have given you three zeros already. So your answer will be 38. Right. So please pay extra attention to the requirement. What is the date? What is the examiner asking you? Are they asking you to round off to any value? Right. So please pay attention to this, or else you will lose your entire 2 marks over here. Right. Is this clear to everyone? Okay. Now let's move on. I will share this Excel file with you guys. Case number 1, question number 2. This is wrong. This is also wrong. This is correct. Okay, now let's move on to next question. Please quickly solve this and let me know your answers. Okay, now since we have answers, so let's solve this now. So your answer for this is a correct statement and this is a false statement. Right. So yesterday I explained you the concept of lease by lease basis, right? It's basically if I want, then I can apply the exemption for one lease item, but then I may not want to apply the same exemption for another lease item. Like for example, if I have a phone which is cheap and if I have a telephone, right? So for the telephone, I might want to account as per the exemption, which is, expense out the entire lease payment. But then for the phone, which is of low value, I can just do normal accounting, which is recognize a lease liability and a right of use asset, right? So, so election for leases for which the underlying asset is of low value can be made on lease by lease basis. This is a true statement. You can follow lease by lease basis for any low value asset. Right. And the second statement says that a class of underlying asset is a group of underlying assets of similar fair value. This is not a correct statement because, again, fair value is something which is pretty much random over here, right? A class of assets is basically when you have similar nature assets together, right? A class of underlying asset is a group of underlying assets of similar nature, right? Fair value is nowhere involved in IFRS 16. And when you want to classify something as a group, then in that scenario, fair value is not considered. You consider the the nature of the lease, right? The nature of the asset. Okay, is both the statement correct for is understood by everyone? The main point over here was lease by lease basis, and over here the main point was similar fair value. Right, similar fair value is wrong. It should be of correct. It should be of correct. It should be of similar nature. Okay, let's move on to next question. Please solve question number 4 and let me know the answer. Pay extra attention to the year end. It's for 31st March 20x5, and they have given you the annual installment of tablet devices for $16,000, and this is for nearest thousands. Right. So I'm giving you 1 minute. Please solve this. Okay, we have a doubt. The doubt is for this question. Question number three, second option. So over here, the question is saying that you have a class of acid, right? But then the class of acid is formed by grouping acids which have similar fair value, right? So simply they're saying you that if I have an acid which has the value of 5,000, value of 6,000, and value of 7,000. If the fair value is 5,000, 6,000, 7,000, I'm going to group all of these together, right? Just based on the fair value. But this is wrong, right? IFRS 16 says that you are supposed to group assets only if they are of similar nature. Similar nature means for example, if I have a car, if I have a truck, right? If I have a bike. So if you see all of these are of similar natures, right? All of these are somehow some sort of vehicles. Their nature is similar. So IFRS 16 says that you are supposed to classify or group an underlying assets into one class, right? If they are of similar nature and not what the question says, which is the similar fair value. Okay, is this clear now? Okay, now let's move on to the next one and let's solve this one directly. So it is saying us we have question number 4 and it is given that annual installment for tablet is $16,000 each. Okay, and let me open the case. And it says that the lease term is for 3 years. Right. And on 31st March 20x6, the first two annual payments installments will be made. So we are right now on 1st April 20x4. We have got March 20x5, March 20x6, and then we have March 20x7. Okay, so over here they're saying us that the we have 16,000 here. Annual installment is 16,000, right? And it's for 3 years, which means that each year in 20x5, 20x6, and 20x7, you will be paying 16,000, right? So they're asking us what liability should be recorded on 31st March 20x5. Okay. See, liability will simply be the payment which has not been made yet, right? So on March 20x5, they will make payment of 16,000, right? But then the payment which is 16,000 into for next 2 years, which is for 20x6 and 20x7, which is for 2 years, will still be pending, right? Liability for 2 years will still be pending, 32,000 will be pending, right? And out of that, they will recognize expense for 12 months. into 12 divided by 36 months, which is the duration for the entire lease term, right? So over here, simply you have to find out the accrued expense. So $16,000 into 2 years, and then you're supposed to multiply with 12 because 1 year has been passed, divide by the total 3 years, right? Then you will get the liability, which is the accrued expense of 10,666, and if you round this off, you will get 11,000 as your answer. Right, so this should be the liability which should be recorded in the SOFP as at 31st March 20X5. Is this clear for everyone? This was a little confusing question. They have given you the fair value of the tablet just to confuse you. Right. If you see the question, they have given you fair value of tablet devices for 26,000. That's just to confuse you. You were supposed to use the annual installments of 16,000. See, the liability will be 32,000, which is 16,000 into 2 years. And then the expense, which is the accrued expense, will be basically 32,000, which you found out, which is the liability for 2 years, into 1 year, which has passed, divide by total 3 years, right? And then you find out the accrued expense, which is 10,666. Yeah, 32,000 divided by 3. This is per year. Okay, now let's move on to the next question, which is we have another case, which is case number 2 over here. And I'll send you a screenshot of this case. I think we missed one question, right? Oh, right. We missed question number 5. Please solve question number 5. This is important one. And then we will move on to the next case. Right, question number 5. This is for sale and leaseback. say for sale and leaseback, we simply have a journal entry, right? So please solve question number 5. Okay, so in question number 5, they are saying that you have a property, like the company has sold a property of fair value of 7.4 million. Right, let's write in full terms over here. Since the answer is in full, right, it's you're supposed to be very careful with the numbers, with the number of zeros you're putting over here. Fair value is 7.4 million. Carrying amount of the property is 5 million, right? And the company has immediately leased the property back on 1st April 20x4. So this is sale and leaseback scenario. The first 5 annual installment is 1.6 million, which was paid on 31st March 20x5. Okay, so at the end of first year itself, they have done the payment of 1.6 million, which is one of the first 5 annual installment. And over here, if you realize, they have given you the discount factor. Discount factor is 4.452, right? And the present value of annual lease payment will okay, lease payment is 1.6 million. Right. So over here, the first step should be that you find out the present value of the lease payment, right? So present value of lease payment will simply be the lease payment, which is 1.6 million, into the discount factor given to you. So 7.123 is your present value of lease payment, right? And since we are doing sale and leaseback, this is a journal entry which I recommend that everyone learns for simplification of such a question, right? So how much cash is being received? They have sold the property for its fair value of 7.4. So the cash will be 7.4 million. Your right of use asset, you're supposed to figure out with the help of a formula. The assets carrying amount is 5 million, right? So you have to credit the asset because it's disposing of. You will get a cash of 7.4 million. Your lease liability, which you just found out, is 7.123, right? And the profits will be the balancing figure. So how will we find the right of use asset over here? We simply have a formula. Right of use asset is the present value of lease liability divided by the fair value of the asset into the carrying amount of the asset. Right. So if I simply find out the value of right of use assets, it's the present value of lease liability into the carrying amount divided by the fair value. Right. So I'm getting 4.81 has the right of use asset. And then when you find out the balance figure, you will get the profit or the loss. Right. In the question, they're asking you for the profit. So you know you have to find out the profit over here. Right. So simply when you just solve this, simply you have to add the debit balances and subtract the credit balances. You will get a profit of 89,772. And if you round off, it will be 90,000. So your answer is option number A. Right. Round off to nearest thousand. So answer is 90,000. Okay, is this clear for everyone? This is something which is asked on regular basis. So you should know this journal entry and you should know how to calculate the profits and loss in such questions. Khushi, you must have made some mistake because answer is option number A, right? Please check your answer. You guys can take a screenshot of this working also. And whoever is done with this, please read the second case which I have sent, case number 2. So let's move on to the first question. So over here, let's solve this. So the question says that they have given you 6 options and you're supposed to fill in 3 blanks, right? So agricultural produce is the dash of the entity's dash and a biological asset is dash, right? So over here, the answer will be agricultural produce is the harvested produce of the entity's biological assets, and a biological asset is a living plant or animal, right? So agricultural produce is the harvested produce of the entity's biological asset, right? And then a biological asset is a living animal or plant. This is IS 41. It is not frequently tested, but it might still appear in your paper, right? So if you have guys have any doubt in this one, this was comparatively simple also if you have covered this accounting standard. Okay, I assume that everyone has understood this. So I will move on to the next question, which is as per IS 41, how should each cubic meter of harvested trees be measured at 31st March 20x3? Right, they're simply asking us how the measurement should happen. Right, so IS 41, please let me know the answer. Okay, here the answer is option number C, which is fair value of $75 less the selling cost of 3. Right. Why? Because as per IS 41, you are going to measure at the fair value less cost to sell at the point of harvest. Right. So the fair value which is given to us is 75 million. I mean, sorry, $75 per meter cube, right? And the selling cost is $3, right? So over here, simply your answer will be option number C. Okay, this was simple one. Fair value less cost to sell. Right, fair value given to us is 75 and cost to sell is $3. So at the year end, the fair value will be $75 and the selling cost will be $3. Okay, I'm moving on to the next question. This is a bit confusing one because I feel like they have put a question from PM over here, but still please try to solve this question. Question number 3. Okay, now let's solve this. So over here, answer is 45, right? So the method how you were supposed to find out is that you were supposed to find the total absorption of overhead cost in closing inventories, right? They have given you 500 bags. The company had 500 bags of wood chips in the inventories, and the total number of bases of units which they have produced, right? The base production units given is 4,200 over here. So they have produced total 4,200 bags, and right now they have got 5,000 bags of wood chips in inventories, right? And it's given that what are the total overheads that should be included in cost of closing inventories, right? So over here, the method you are supposed to follow is that you have to simply apportionate the total overheads should be apportionate to the 500 units in the closing inventories, right? So over here, your answer should basically be is equal to 500 divided by the total number of units. You'll get 0.12, right? This is basically like the cost per unit, right? And then you have the total production overheads of 378. So when you multiply 0.12 into 378, that's when you get your answer, right? So simply you're supposed to apportionate the total overheads, right? The total overheads needs to be apportioned to the 500 units in the closing inventories, and then you're supposed to multiply it in the 378, which is the total production overhead, right? This is not something which they frequently ask in FR. This is more of a PM question, but still you're supposed to be able to solve this also, right? And there are various methods by which you can find out this answer. Right, the method which Khushi has commented, that's also correct. The total production overheads into the total number of into 500 bags divided by the total units, which is 4,200. Right, is this clear for everyone? And I hope such questions don't come up in your paper. Okay, let's move on to the next question, which is a very simple question. It is simply asking us that whether each of the following cost formula is permitted by IAS 2 inventories to calculate the cost of inventories, right? So yesterday we revised that there were three valuation methods for inventory, right? We have the FIFO method, we have the LIFO method, and we have the AFCO method, which is the weighted average cost method, right? So if you attended a session and if you have gone through IAS 2, you know that LIFO method is not permitted, right? It's not allowed as per IAS 2. So over here, simply the answer is that FIFO method is allowed, LIFO is not allowed, and APCO method is also allowed, right? So this is the answer. Does anyone have any doubt in this question? LIFO method is not allowed as per IAS 2, while the other two methods are allowed. So simply the answer is true, false, and true, right? And in this question, in such questions, in order to earn entire 2 marks, you need to have all the three options correct, right? Okay, guys. So we are done with the March, June. Basically, we are done with 2025 examiner reports. Right. Section A is covered yesterday. Section B was covered today. Right. So here comes the end of our practice session. And then now I want to know if you guys have any doubt in any of the standards, if you have doubt in any of the calculations, anything which you guys want to ask me, you can comment in the chat box. Yeah, please ask me, Raghav. Yes, please. If in a case out of 5 questions, if any one question is wrong, is the total case wrong or the particular question will be wrong? Will we lose mark for the whole case? Now, is this for section A, B, or is this for section C? Because if it's for section A and B, then in that scenario, if any of your one option is wrong, then you will lose your entire 2 marks. I remember, I think it was in my FM paper, they gave me this question and I had to choose 6 correct options, right? That was practically impossible for me at that time, right? So obviously, if I didn't have the entire 6 options correct, I lose my 2 marks. So I think I lost my 2 marks over there, right? So if like for this question we just solved right now, this one, if over here, if you have just 2 options correct, you're still not going to get full marks over here. Your all 3 options, 1, 2, and 3, all of these should be correct in order for you to earn entire 2 marks. Right. So this is something you should remember. And what can we do? It's like this itself. You won't lose mark for the entire case. You will lose mark just for one question. If your question is wrong, if you like, for example, if you have done question 4 wrong, then you will lose marks over here. You won't lose marks over in question number 3, right? So don't have such confusions. Yeah, just for one case. Just like you have 5 questions in one case, right? And in 5 questions, if you have one question wrong, so you lose marks only for that question, not for the entire case, obviously. Okay. In your paper, you'll have approx, I think, depends, 32 questions will be there, right? 32 questions, 33 questions will be there. And each question has different marking scheme, obviously. So the result of one question does not depend on the other question. Okay? Does anyone else have any doubt? Yeah, I think there are no more doubts. So I want to speak about the webinar. So day one, we had practice of section A. Day two, we practice section B questions. And section B, what happens is that if you have 5 questions, out of 5, you get 3 easy questions and 2 tough questions. That's normally the pattern, right? So don't panic if you're not able to solve one of the question, right? Your next question will be comparatively easier for you. Right. So tomorrow, which is day 3, tomorrow I will be taking a session on section C, how to solve single entity questions, how to solve group accounts, and how to write proper interpretation answers. Right. And I will also solve section C question, which is like 2 questions from the September-December 2025 paper. and then I will explain it with the help of examiner comments, right? Where are the areas where common mistakes are being made? So everything will be explained in regards to section C tomorrow. And this the third day is a paid session. So if you guys are interested, then you guys can message me on WhatsApp. I'll share my WhatsApp number in the next slide, and it costs around 699 rupees or $10. And in this you get access to the third day webinar, which is again completely focusing on section C. And then you also get one mock evaluation, right? Since most of you have not given any mock till now, if you want the access to day 3 webinar, and if you want to give a mock exam and you want to get it evaluated by me, then I feel like this is a package which you guys should purchase. This is for 699 rupees and for $10. And this webinar is basically free for all the test series students who have already enrolled with me, right? So if anyone is interested in this, please message me on WhatsApp. Right. And the mock evaluation will be for the pre-March mock, which is released by ACCA. You will get proper detailed feedback on how to improve your marks. Right. As per each and every question, I will evaluate your performance, and then I'll share the answer script of another student, so you can compare where you stand and where someone else is performing in the same platform. Right. So please let me know if anyone is interested. And so that's it for the session we had today. This is my phone number. You can WhatsApp me on, you can message me on WhatsApp if you have any doubt. And I'll share this PDF with you guys. So if you want, you can practice these questions again. This recording will be available on YouTube, so you can rewatch it also if you want. And if you found this webinar useful, if the practice session was useful to you guys, you learned something new, then you can share the link of the webinar with your friends also who are going to appear for FR. And this webinar will be applicable for the next session also, right? For the June session, right? So does anyone have anything to ask? Because this is the end of our session, right? If anyone is interested in the day 3 webinar, please let me know. This is my phone number, and thank you so much for joining me for this session, right? And I hope that uh you guys learned something new, and this was useful for you, right? So thank you for joining. The recording will be available on YouTube.